everyone just wants to know about what's going on between the president, the administration, and Jerome Powell. You had Scott Bessent on the wire this morning saying that he doesn't see a case for the Fed chair to step down at this moment, but I mean, we know which way the wind is blowing when it comes to the whims of this administration.
That's right. The administration very clearly wants lower interest rate policy. The administration very clearly wants the Federal Reserve to cut interest rates by 200 to 300 basis points. That's what we heard from the Fed chairman. And they're using other functions of the Federal Reserve, including its banking authorities, including other sort of like supervision requirements that it's imposed on the banks that it supervises, and including the renovations to the Federal Reserve's headquarters as some sort of red herring or cover to muscle or apply political pressure to the Fed to lower interest rates. But that's an ever-evolving set of circumstances. As you said, just this morning, Scott Bessent was taking a step back and saying monetary policy, the monetary policy and interest rate setting function of the Federal Reserve should be sort of set aside in a jewel box. And I think that that's right. If you want to take shots at the Fed for spending too much on its renovations, fine, but that interest rate setting authority of the Fed should be set aside.
So speaking of the jewel box, Katie, you pointed it out this morning. I think it struck a lot of people to hear Mohamed El-Erian, of all people, say that if the Chair Powell's objective is to safeguard the Fed's operational autonomy, which he deems vital, he says, then he should resign. And I think it raises the question here, surprising to hear this from him. He says it's not the consensus view, but does this show that the pressure being put on the Fed chair is already impacting the market? It's already impacting what the independence of the Fed is perceived as by the market.
It is a little bit, and we saw last week when news reports hit the wire that the president was planning on firing Fed Chair Jerome Powell. Long-term bonds sold off pretty dramatically. When the president then pulled back during a meeting with, I guess, the Bahraini prime minister, that no, in fact, he was not planning on firing the Fed chairman, we saw prices rebound for those long-term bonds. Now, so clearly, Dr. El-Erian is correct that the market is questioning the extent to which the Fed can stand pat and stay politically independent of the administration. But as he goes on to say in that quote, the first best situation is not for the Fed chairman to resign. The first best situation is for rhetoric to sort of be toned down in the White House. And I think that we can see some of that. We are seeing some of that from Treasury Secretary Scott Bessent.
And it's interesting, you know, it feels like this is really heating up as we really barrel into a Fed meeting next Wednesday. Jerome Powell, even on the best days, I feel like he doesn't look forward to the press conference. But next Wednesday, I feel like he especially won't be excited for some of the questions he's going to be taking.
No, he's undoubtedly going to be sent the question, how much are you taking political considerations into account when you're setting interest rate policy? I think that the only real question to ask him about political considerations is, do you feel more compelled to stand pat and hold interest rates steady in the face of political pressure? When he then says, no, we're actually just focused on serving the American people, you then have to go and the next question as a follow-up should be, well, the bond market just last week and into this week has been questioning your independence, has been questioning your resilience to that political pressure. What can you do to regain the bond market's confidence that you are in full control of monetary policy?